Hi guys, thanks for watching. This Saturday, I'm here with Juan, who, if you don't know, Juan was the number one IUL producer with FFL last year, and you wrote like 1.3 million of premium last year IUL business, and he's someone who helps out everyone on the team a lot, but just very good overall producer. So Juan's gonna go through a presentation like how he does with his clients, as if I'm the client, and show you guys how simple it is to build the illustrations and how simple the presentation can be. So Juan, I'll let you take it away, but thanks for being here today and helping everyone out.
Sure. So, guys, if when once you go, this is with the National Life Group, the company. So you can do it with any other group, but this is through National Life Group right here. We're gonna click on the illustration first, and then I'm gonna basically pick the state which we're assuming Zach in Texas, so we're gonna leave it there, but you can choose whichever state you want, and then you just click the first one, which is Flex Life. And then
Mhm.
after that, I'm gonna ask a few questions. So Zach, your last name is Zachary
Yep.
Tradowski.
T,
T
perfect. Yep.
T A
W T
W
W A R
T W A R
D O W
D O W
S K I.
S K I. All righty. And male, we leave it like that,
Yep.
male, and then your date of birth.
April 1995.
1995, and that would pull out basically that you're 28, you're gonna be 29 in April, so that puts you right there.
Hmm.
We always do a standard because the company is gonna probably choose, you know, Zach as the elite, but or prefer, but then we just leave it always like that. We always show as a standard.
Yeah.
Uh, then we're gonna go click on death benefit and funding, and we always want to pretty much design it the way that we do it is fine for as far as like building a cash value for retirement. We're always gonna
Hmm.
this option number one. The other options are more for more life insurance into it, and that's the option number one. So just so
Cool.
you know, and so we're gonna click on that one. And Zach, as far as like, since you're young, typically the level is more for people that are gonna want to start with a bigger policy from the beginning. In your case,
Hmm.
you want to build up the most cash value and the least amount of life insurance. So we're gonna hit on increasing,
Okay.
and we're gonna basically go. Let's see that you're gonna be funding it until age 65. So we're gonna also do it for that period of time. We're gonna specify the amount. We're gonna go to monthly, which is
Hmm.
what most people fund it for. And we're gonna go A through A65, which is basically where how much we're gonna fund it. My question to Zach will be, how much are you gonna be funding this through, like monthly, like minimum and maximum amount of money for per month?
How much do you recommend I should do, Juan?
How much money are you making right now per month or per year?
Let's say 200,000 per year, let's say.
200,000. So I would recommend anywhere from uh, five minimum to 10% of your income. So we will
Okay.
say basically if you're making uh, $15,000 per month, I will say about anywhere from 750 to 1,500.
Okay, that's fine. Yeah, let's look at it at 1,000 then. Does that
Okay,
sound good?
that
Yeah.
sounds good. So $1,000, and we're gonna basically uh, hit this, and we're gonna, since we already got it all designed here, we're gonna do a quick view and
Hmm.
show basically the beautiful IUL that we created. So first thing is Zach is gonna have $331,000 minimum death benefit. That's the initial one that will initiate. Is
Hmm.
a permanent policy, so it will not lapse as long as we keep funding it properly. And then we have a non-MEC. That means no taxes when people take it out of the funds, and then you have a premium of 1,000. You can put Zach can put as much as $12,000 every year inside without making the which is the modified endowment contract. So cost of life insurance for Zach is gonna be somewhere around, I will say, we'll call it like $90 per month.
Mm.
So that about 9% of the money is gonna go because he's young. That's pretty good. So you're basically out of that 1,000, you're funding a lot of that on the growth. So that means 12,000 goes in right here, and a lot of money goes in the cash value. So you're funding it right here, and 10 years later, when you're 38, you're gonna basically looking at 144,000 cash value.
Hmm.
So my question to you, Zach, if you have left that money in the bank, do you think the bank will have given you that much interest, like over $24,000 in interest?
No,
No.
no.
And so the other thing is, if you something happens to you, and the banks only give the family whatever they have in the savings, nothing else extra. On this one, something happens to you at any time, your family will get basically a 331,000, which is the initial death benefit plus whatever you have in the cash value. So if it happens on year 10, they'll get both as 476,000, and it's all
Mm.
tax free. So that's a very good thing. And then the other part is, once 10 years pass by, if you keep funding it this way, 5 years later, it's gonna look amazing. It's gonna look like
Mm.
261,000, and then 20 years, 5 more years, 421, and by the time you retire, you will have about $1.6 million. So you could retire easily with about 130, $140,000 every year, tax free, out of this retirement. So you think that something that you can live with?
Yeah, it would definitely help. Do I have to keep, so I don't have to pay on it when I retire, Juan?
Nope. And then that's the other good thing is here. If you look at this, this is you don't have to continue paying. In fact, if you stop paying earlier, it will stop. Basically, it will continue to grow your money. It probably will not be like this, but it will continue to grow because after you've max fund your policy for 10 years, it should continue to grow by itself.
Got
So
it.
that's the good thing about these policies. And it's a permanent policy, so it covers you for the rest of your life. So if you look at when by the age of 90, you can have about $8 million. So that's a transfer of wealth that you can do for your family. Other people do it to take loans or anything,
Mm.
or a great retirement. Uh,
If I take loans, when do I have to pay those loans back? How
so
fast?
So the way that this is because you become your own bank, and that what that means is you decide how to pay the loans back. So that means
Mm.
you're gonna still make the interest on your cash value. So whatever the interest is on that year, if it's 6% or 7% or 5%, you still make that interest on the cash value, and the loans are coming from the credit line, which is the surrender value, and National Life Group is going to lend it to you less than 5% typically. So that's typically you're going to either go a wash where you don't pay any interest, or you basically make a little bit on the money. So it's kind of like, hey, if you go to Wells Fargo, they're going to lend you money, but they're going to charge you the money. But
Got
here,
it.
you get loans without having to pay any interest.
Okay, that makes sense.
Mm-hmm. And you can repay the loan whenever you want to. Like you can repay as fast or as low as you want to. Uh, the other thing that I will say is that I like to explain the way the IUL works is like a seed. When you basically plant a seed for a tree, you basically plant it and you water it, which is your money, that $1,000 per month. The first year is going to be a small plant. The second year is going to be a little bit bigger, and the fifth year is going to be like a tree. with a little
Hmm.
bit of fruits. 10 year is going to be a big tree with a lot of fruits that you can feed in people. And then after that is going to be several trees. So it multiplies, it compounds over the years. Any
That
questions?
makes sense. No, not on this so far. So I get interest based on how the market does.
Right. On average, basically historical average shows that people are making 6 to 10% interest
Okay.
on the cash value money. So this cash value is always going to be from making those interests, and this is shown at a you know 6.42. So right now we're illustrating at 6.42 at the age of 29, putting $1,000 per month.
Got it. That makes sense.
Uh, that's cool. Anything else that any questions that you have on this, or as you can see, this is all about you when you're alive, not when you
Hmm.
basically, because when you die, everything is gonna go to your family, basically all tax free. So,
Yeah.
do you have anything like this on your portfolio right now, Zach?
No, no, I don't have anything.
Would you like to have something like this on your portfolio?
Yes.
Yeah. So the next thing we do is send out an application on your behalf to National Life Group. Is it okay we send it out for the $1,000, a little bit less or a little bit more?
1,000 is fine. Hey,
Okay.
Juan, do you show people the reports ever still or no?
No, not anymore. I used to.
Cool.
And then so I leave now the report as a second close.
Cool. So if I'm like, hey, Juan, I want to maybe I want to think about this. I'm not totally sure if I want to do this or not.
Oh, yeah, sure. Everybody needs to think about this. And this is something that and what I like to show you also is this
So
is
so if I say no initially, or if I say I'm not sure, then you go, well, hey, let me show you one more thing so you have some more information before we go.
exactly.
Okay, got it.
Exactly. That would be one of the things that I will do, and then that way I show them and I show them all how they benefit from all the critical illness and chronic illness, and then I'll say just remember we're not making a decision today. All we're doing is sending an application to see if you get approved. Now, once you get
Hmm.
approved, then you have a big decision to keep, which is basically do you want to keep the IUL like it is right now, or do you want to increase it, or do whatever you like?
Got it. Which part of the of this do you show clients if you need to give them one like to help close them if they're not sure?
So I show them that if they die too soon, if they live very long, and they become ill. So if they become with $1,000, with 1,000, sorry, $1,000 a month. If you die too soon, 332,000 goes to the beneficiaries. But if you live very long, you have a lot of money that you
Hmm.
can get through it. And the other part is if you get ill, if you have an illness, here it shows at the age of 65 what it could happen. Sometimes long-term disability can be one of the hardest things for a family to do. And then a lot of people are looking for long-term disability. What can I do? Well, these policies cover that. If something happens like a
Hmm.
chronic illness, that's a long-term disability. Then you're basically after 90 days of disability, you can apply for this and you can get a monthly income to help you replace what you lost. In this case, at age 65 is 30,000. Maybe it will be less at the age of, you know, 40 or 50, but it will cover you for a lot of money. Okay.
Wow.
So this is, and then if you have a critical illness, like a heart attack, a stroke, cancer, something like that, or a terminal illness or an accident, and you were paralyzed or blinded or anything like that, you couldn't continue to work. This is something that can cover you, or Alzheimer's disease, even that will cover it. So as you can see, this is a complete about you when you're alive, not just when you die. When you
Hey,
die,
how much extra does the illness thing cost?
nothing. It's
Oh.
part of the policy. So if something happens to you during your lifetime, while you're having this policy in place, it covers you for sicknesses like this, accidents like critical, and anything that basically any type of death, where is, any type of death. So it's very complete. As I say, it's all when you're alive. So if we send it out, is it okay? We send it out for $1,000, a little bit less or a little bit more?
Yeah, 1,000 sounds good to me.
Perfect. And I just click on ego and then we'll go to the application.
Hey Juan, one thing I've seen, and then we can wrap up real quick, but one thing I've seen is a lot of new agents, whether it's selling this or term insurance or final expense insurance or just getting the initial phone call is people will say like, oh, I'm not sure if I want this or I'm not interested, or they give the initial objection, and a lot of agents give up right away, right? They go, oh, okay, sounds good. Or like they get to someone like this, and I go, man, I'm not sure if I want to do this, and they just give up. What is your advice for how much you push until you decide whether or not to walk away from the sale? Because the first objection you have to push through. So what is your advice to new agents who, just fold up when they hear one no and they don't keep pushing forward at all?
Yeah, typically the no, when people hear a no, is basically they don't have enough information from you, and typically they're basically just have to make a new decision.
Mm,
Because if you don't give them anything new, then they're gonna be like, you're just trying to change their mind. And then so if you give them just a little new information, like, hey, all we're doing right now is sending an application on your behalf. We're not making a decision today. That's a new information that they didn't know. Now they can make a new decision. So just give them a little bit of new information, even if you don't show them anything, and then you can try basically 3, 4, or 5 times with new information without having any pressure on the customer. All
mm,
they're gonna do is just give them say, now let me show you something new. Like I can show Zach how he can get lifetime income. So I say, oh, by the way, another thing I forgot to show you, you can actually get a lifetime income out of this policy. So if I show you right here, Zach, you basically have funded the policy $1,000 until age 65, but then when you retire, you can get 132,000, 246,000 for the rest of your life, tax free.
mm.
Now, Zach, as I mentioned, this is something that all we're doing is basically sending out the application to see if you get approved. Now, once you get approved, we have to make the decision whether we're gonna keep it the same level, at a higher, lower, and you just let me know. Now, if we send it out, is it okay? We send it out for 1,000, a little bit less, or a little bit more?
1,000 is good. I like that because you just have more things to keep going back to, right?
Right. It's
Um,
gonna
la
if you close on the same thing, they're not gonna make any decision because they already decided. But new decisions always made.
What do you do? So say you always tell people like, hey, you don't have to 100% decide today, because we're doing the application, but you're gonna have to make a decision, a final decision when it comes back. What do you do if you have someone like that to make sure that when I do get approved, that I want to continue with the policy and I won't cancel it? What does that conversation sound like?
Yeah, I typically just say, when we spoke, Zach, you were very concerned about your retirement, remember? And
Hmm.
and I show you kind of how you could retire with 132,000, which you told me that sounded pretty good. And a
Yeah.
thousand dollars for month. What is something that you feel that is not meeting up your needs on this? Because we can flex it. If you need to lower your monthly, we can do it. So what will be something that you feel that is not working for you?
No, the price is okay. I'm good with it.
Okay. Yeah. So 1,000 is okay. So
Yeah.
and then you feel like $132,000 that you over time that you grow, is that pretty good
Yeah, that's
retirement for
good.
you? Yeah. So main thing is, if at any time you wanna change your policy, just remember to call me. I'm gonna be like your doctor for the finances. So if your pocket hurts, I need you to call me. If your pocket goes inflated, I need you to call me because we have places to put your money to. All right.
Awesome. Cool, man. Hey, Juan, thank you so much. That was super helpful. Like you said, when you call, I think it's important when you call back with them just to make sure that they're totally good with the premium before it drafts, right? Because you don't want someone to have their account drafted for 1,000 or 2,000 or $5,000, and then you didn't talk to them, and then they're mad. So it's
Right,
super important with final expense, but it's even more important with IUL business that you're doing a really good job of clarifying and making sure that they understand the product, they like it, they're comfortable with it, and that it's going to draft, and they're not surprised by a big payment coming out, right?
right, right. That
Yeah.
happens all the time.
Awesome. Well, hey, thank you so much for your time, everyone. Thanks for being here. And Juan, I appreciate everything you do for the team, man. I really do.
Bye bye.